suspension of the Itala bank license by the Financial Sector Conduct Authority has caused quite the stir in KwaZulu-Natal. King Misuzulu and the business community in the province have raised concerns over the suspended license and its consequences for civilians. Now, Itala is not the first bank in the country to go down this route. Is there a flaw, we're asking this morning, in the business model of some of our smaller banks in the country? And for that, to have that discussion, we are joined now by founder and chair of Newzroom, who is Stuart Theobald, joining us live from London this morning. Stuart, a good morning to you. Thank you so much for joining us. So an interesting thing is the conversation around Itala Bank since last week has been that Itala Bank has lost their operating license, but one of the first points you want to make is the fact that Itala Bank is in fact not a bank. Clarify that for us.
So people have been reporting, as you say, that Itala has lost its banking license, but Itala doesn't have a banking license. Itala is actually a creature of statute. So it was created in the 1950s by an act of the provincial parliament of what was then Natal that set it up as a state-owned entity. And it's not, in fact, regulated the way a bank is. It's not licensed in terms of the Banks Act, and it's not supervised by the South African Reserve Bank. What has happened is that it had a financial services provider license, a Category 1 FSP license, which is overseen by the Financial Sector Conduct Authority. And the FSCA has suspended that license. So it's a financial services provider license, a Category 1 license, and it suspended it because it says that Itala no longer meets the fit and proper requirements that financial services providers are required to meet. Yeah. And that's in terms of its financial standing. So essentially it's saying that Itala doesn't have the financial soundness required to maintain an FSP license.
Yeah, and one of the big questions, okay, so that's really interesting, and I'll get to that point in a moment, but Kaya Sithole has also written about that, right, saying that the bank actually had been granted an exemption that allowed it to operate like a bank. Now, obviously, the King and business leaders in the province of KwaZulu-Natal have raised concerns around it losing its ability to operate. But what does that mean at the moment for its customers, in your understanding, Stuart?
So it doesn't mean anything. It is able to continue to operate and service its existing clients. The only thing it's not permitted to do is to take on any new clients. So existing clients should have no problem. The bank will continue to operate and service them. Now, of course, it's a concern for the province. The bank is an entity that is ultimately owned by the province of KwaZulu-Natal. The fact that it has encountered this financial soundness problem indicates that the province needs to work through how it might restore the financial soundness of the institution if it wishes it to continue operating. Now, it's some time since Itala has published its financial statements, but if you go back to its 2022-2023 year, you can see that the bank has been losing money. It is losing between 50 and 60 million rand a year for those particular years. And no bank can continue losing money indefinitely. Eventually, it eats into the capital of the bank and it becomes at risk of solvency. So the business model of the bank needs to be examined, and it needs to be repositioned in a way that is sustainable, that allows it to operate profitably. And the province needs to recapitalize it to ensure it has sufficient capital to function.
Yeah, very interesting. You know, if we expand the conversation a little bit, and you recently wrote an article for the Business Day wherein you say it's time to rethink banking regulatory regimes in South Africa. Now, I raise that because certainly when you think of Itala, it's hard not to make the comparison, for instance, with VBS and other banks that may perhaps sell themselves to the customer as the people's banks, right? So smaller banks that have a direct, link to their consumers, particularly where we're talking about their customers being really poor people. And you've talked about how small banks in South Africa are struggling, and you're right, it's time to rethink the regulatory regime that they're subject to. And you've actually made a few examples, but talk to us about the point that's made there around some of the smaller entrants in the banking sector and why they seem to be struggling.
Well, I think there's several different reasons that they struggle. You know, banks are a scale business. You need to be quite big before you have sufficient business flows to justify the fixed costs. Operating a bank is very expensive. You have to run the systems, you have to have complex compliance requirements. You have to have extensive risk management. And it's difficult to be a small bank and have enough business to be able to cover those costs. So I think there's a business model issue, but there's also, I think, a regulatory model in that banks are effectively regulated as if they're all large, systemically important banks. Those are banks registered under the Banks Act.
Yeah.
And if you registered, you have to comply with all of the requirements of global banking capital requirements, what is known as Basel III. You have to ensure you hold sufficient capital, but you also have to ensure that you have sufficient liquidity and stable funding. And you're regulated as if you're a big systemically important bank. Now, many jurisdictions around the world are starting to re-examine that. Does it actually make sense that we regulate banks as if they're systemically important? Some banks are fairly simple, non-systemically important. They operate very basic business models. And there's not really a reason to require them to comply with some of the onerous standards that you would require a large bank to comply with. Now, you do not want to introduce risk to the system. You've mentioned VBS. We've had bank failures in South Africa in the past that are very destabilizing to the system. So you do absolutely need to regulate appropriately. But there is a question being asked in many jurisdictions about how we deal with small banks so that we enable them to be competitive, because small banks offer value. They often bring new innovation, and in that way, they can make a banking sector more competitive and ultimately offer better services to the public. So we do have a public interest in an environment in which small banks are able to enter or able to be disruptive to the established big banks. So we should encourage that, and looking at regulatory regimes that make it somewhat easier to be a small bank, I think would be welcome.
Yeah, I wonder, of course, and one of the things that we talked about is some of these smaller banks, some of them we even call development banks, for instance, speaking directly to the poor South African or the poor consumer. And maybe we need to talk about how they're able to do that. And if I'm watching at home and I have an account with some of these smaller banks, what is it that I need to be wary of? I mean, I think about, for instance, African Bank and how just a few years ago, when you write about this as well, it emerging from that rescue process. But prior to that, for many, many years, it was the trusted bank by its consumers because of its competitive interest rates. It just seemed to understand the poor South Africans so well. So if I'm watching this right now as a consumer, what do I take for the conversation about how I should be more cautious?
Look, banks in South Africa are extremely well regulated. The South African business banking sector has a strong reputation globally for the quality of the supervision that the Reserve Bank provides. So there is no reason to be concerned about exposures to banks. And recently we've had the introduction of deposit insurance into the banking system. So that means that anyone with a deposit of 100,000 Rand or less in a bank is basically guaranteed. If that bank fails, they will be bailed out by the bank deposit insurance scheme. So if you're a small depositor in a licensed bank, you can feel very confident that A, the bank is regulated, and B, even if it does fail, you're protected by a deposit insurance scheme.
Yeah.
Now, I think in terms of services to the poor, to financial inclusion that we should expect from the banking system, there is certainly opportunity there for innovation. And we've seen some banks succeed and make real progress. A bank like Capitec is remarkable in the last 20 years. It's clearly a bank that has been able to enter and build a strong business model. It's been very disruptive to the status quo, and it now services many millions of people who had not previously had access to banking.
Yeah.
You mentioned African Bank. I mean, African Bank's business model in its prior form, before its resuscitation, was as a lender primarily. It didn't, in fact, take much by way of deposits.
Yeah.
So it was a lending bank, and it funded itself in the financial markets, borrowing money basically from big financial institutions in order to lend out. And that was its model, and that ultimately is the model that got it into trouble. It's a very different kind of bank now, with a much bigger deposit base to use for funding.
Yeah, I think the right wording here is to talk about mutual banks, right, and not necessarily development banks. But I want to talk a little bit about what we learned then from the international community about what they're doing with some of their smaller banks. I mean, in the article that you've written, you also talk about the need for, I suppose, a more tiered banking system, right? Why is that important, and how do we get that right?
So you mentioned mutual banks, which is interesting, and VBS was an example of this. In the South African regulatory architecture, you have the Banks Act, which covers larger banks. It requires them to have capital of at least 250 million rand. And banks registered under the Banks Act are subject to a very onerous regulatory regime. The Mutual Banks Act, on the other hand, is much less onerous. Banks only need capital of 10 million rand. And they have a much lighter set of Basel requirements that they must meet in terms of capital ratios and liquidity and so on. The thing about mutual banks, though, is that it's not designed to be a second-tier banking sector. Mutual banks, and the name is in mutual, have a specific kind of ownership structure. That's their defining feature. And they come from the days of building societies, where effectively the clients of the bank were also the owners of the bank. So in that sense, it's a mutual. And indeed, in mutual banks today, there are depositors who are in fact the shareholders of the bank, and the deposit is what entitles you to be an owner. So in the mutual bank context, it's that ownership feature that defines them, rather than the fact that they have a lighter regulatory regime.
Yeah.
What I think some are starting to recognize and advocate for is that we need a purpose-built second-tier banking regime, rather than the de facto role that the Mutual Banks Act, which is not really designed to do. We need a second tier that facilitates the regulation of simpler, less complex, less systemically important banks to enable them to be able to operate more efficiently. So not having to comply with the full extent of the regulatory regime that applies to bigger banks, which will reduce their costs and make them more efficient.
Yeah, well, thank you for letting us broaden the discussion and have, I suppose, that top-down look at really what the banking regime looks like in the country and that need for really tiering the system and what work needs to be done. I want to go back to Itala, if you will, though. What's the way forward if Itala wants to continue operating, to take in more customers and to, I suppose, keep growing as a bank, the bank that it wants itself to be?
Well, really, the decision is in the hands of its shareholders, and ultimately that's the province of KwaZulu-Natal. The bank, from the announcement that the FSCA put out, is not meeting the financial requirements to be fit and proper. And that means that it needs to be recapitalized. So the ball is really in the court of the province to think through what potential financial solutions it can bring to the bank to regain fit and proper status. I think if it's able to do that, then it will be a relatively simple process to be able to continue to resume operations and resume new business.
Yeah. Stuart, this has been a really enlightening conversation. Thank you so much for speaking to us. We really do appreciate it.